quick video here about Fibonacci levels. So there's plenty of ways to draw them, and there's loads on loads and loads of levels. However, I like to keep it simple, so I'll always start with sort of a daily or a weekly time scale, but as we're on dollar yen, we'll keep it on the daily. So with Fibonacci, it's always best to go from a high to a low. Normally I would go to here, which would be the low. However, this was actually on market open where price just spiked, and if that is the case, then I would always just go to body close, which is here. So you've got, this is the first point, this is 100%, this would be 382, this is 50%, this is 618, and this is 78, which is basically, I only like to keep this here is if I were to be entering a swing position, maybe here at 61.8, I like to make sure that my stop is behind here. It's just something that I do for my strategy, but really the main ones is 382, 0.5 and 618. So as a general rule of thumb is, if we're in a very, very bearish or a very, very bullish run where price is moving very quickly, we would probably see the move to the downside, and then we would see a little pullback to 382 and then a continuation of a move down. If it's a slower market like something like this, which is just sort of trending downwards, making higher highs, where it's making, you've got your highs, then your lower lows, your lower high, lower low, lower high, you'll always sort of get something around 618, which is what we've got here. So what you can see here is you've got the move down and now the pullback to 618. Treat this as a zone, don't treat it exactly, because some people will draw high to high, some people will draw candle body to body. People draw it in different ways, so treat them as zones, don't treat them as exact. But what you can do with Fibonacci, which is a great help, is that was our area of interest where we've missed this entry. So then we would go again, another Fibonacci. So we'd go from the high, where are we here? We'd go from the high here to the low. And then again we can see 382, we can see 382, 0.5 and 618. 382 is just on that line. So we've got our points of interest again. So we've got 382 as our point of interest, 0.5 and 618. So where this was just quite a steep move to the downside, I'm just anticipating this to stay around the 382. But if I were to enter this, I would want my stop to be covered by 618 Fibonacci. So there's loads and loads and loads of levels. I mean, you could do Fibonacci's within Fibonacci's, but if you keep it simple like this, you can't really go wrong. I wouldn't trade solely off Fibonacci, but if you look at it here, you can see if we're in a descending channel, price is sort of, it's got tighter and tighter and tighter in this sort of wedge formation along this steeper channel, and then price has broken the daily 50 EMA and now it's coming to retest it. So if you think we're entering this, we've got this key level here, so we've got this weekly level here which is 108.5. we have got the daily 50 EMA, we've got 382 Fibonacci, we've got weekly confluence on our side going to the downside, and I'm sure we would have the 4-hour 50 EMA here as well. So there's a lot of confluences on this position, but Fibonacci is just another confluence. So it's important to use it, and it does work. I mean, if what I'll do is on YouTube, I'll link a video just here and that will be to Fibonacci in numbers. So Fibonacci is done via well, it's in everything. It's in nature, it's in the numbers, how you add the numbers together, it's in our body. Watch the video, it's not long, it's really interesting.